Huge data dump of data this morning. USDA put multiple reports out at 11 a.m. And we always joke that USDA has to throw one surprise into the mix, and they outdid themselves today.
They did. We came with a couple different surprises. One that the marketplace was not ready for, and that was seeing a bullish number come for soybeans and a bullish number for corn. Everybody was expecting to see this report to be friendly to corn. Nobody anticipated bullishness for both these markets.
And you can see on the slide there, corn production dropped 276 million bushels, mainly due to the yield drop of 3.8 bushels. Soybeans is not quite as dramatic, but again, unexpected.
It really was, and actually the yield cut for both corn and soybeans were a little bit bigger than anticipated in this market, taking us below trend line yields for both markets as well. But seeing a little bit of an acres increase, that wasn't expected for the harvested acres for corn. And seeing it, both the yield and the harvested acres lower for soybeans really brought in a lot more friendliness to this market. So we actually did see production cut about 228 million bushels more than anticipated, 87 more in the soybeans. So both were a little bit more bullish than anticipated by most of the traders.
And then if we start going through the numbers, this surprised me. I wasn't expecting a drop like this in principal crop acres.
I wasn't either. I mean, we were going into this year thinking we didn't have a lot of prevent plant. We were going to see the acres continue to actually kind of rival close to that 319.5 that we had last year. So to see that almost an 8 million acre decrease in principal acres was a big surprise. Now, we harvested more than what the drop was between what was planted compared to the previous year, but there was a bigger drop than most we're looking for.
And interestingly, this chart shows the change from the previous year. Red is a decrease, blue is an increase, and everywhere we saw less principal crop acres.
Which, what does that mean that these acres are going to, or it can't be urban sprawl for all of them, but, you have to look at it being some non-traditional crops taking the place in some of these states. But, again, it brings a lot more to the attention to the traders about just where acres could fall going forward.
And then going first to corn.
Looking at these numbers, I mean, it changed from the previous estimate. We did see a little bit less on the planted side, but really a 2% decrease in production was the bigger one. Seeing production come in at just at below 15 billion bushels this time, coming in at just over 14.8 was a little bit friendly to the marketplace, and 3% down from the previous season. So we're looking at actually less corn production than last year.
And again, we have yield below trend now.
And most of the year we were well above trend on the estimations for corn yield. So seeing it drop below trend is a bullish signal.
And then again, same kind of map shows the change in yield from last year to this year.
And again, what's interesting is, when you look at the states that are involved, a lot of them were hurricane states, especially into the eastern seaboard. So you can tell that's where a lot of the decreases came from into play. And most of the increases came in the middle of the country, where there was plentiful rain throughout most of the year. And what's interesting is we saw record yields being projected in Illinois, also in what other states did we see? South Dakota.
South Dakota. And again, corn production, not a record this year.
And quite a bit less than last year when you look at it. So that kind of leads into what are we going to be looking at for corn going forward, because of, production being down, acres were down, and stocks being tight. Is there going to be potential to see this, or the need for corn to grab some acres for next year?
Moving on to soybeans.
Again, the big change, we did see, from the previous estimates, from last month, the drops, a 2% drop in production. Now we're looking at production coming in at that 4.37 billion. The bigger was the fact that we did, again, see the drop in the yield. And, most of the states did see more acres planted and harvested, but it's where the yields changed that we saw the production change.
And again, earlier in the season, they were talking record soybean production, record soybean yield, and we did not end up there.
No, again, just like corn, we're seeing yields come in below trend. So that's somewhat supportive to the marketplace. And this is the third year in a row we're seeing soybean yields come in below trend.
Again, more blue in this one. We didn't see as much downside as we did on the corn map.
And again, a lot of the red, though, comes in the same states that we saw, in the eastern seaboard areas where the hurricanes were a little bit more prevalent. But, we did see in the middle section, again, a little bit better yields, but not really seeing too many as far as record yields for soybeans.
And again, good production, but not the record.
And quite a bit lower than, when you look at the records from 18 and 21, so we're still seeing, below that 4.4 billion, which, we're still looking at a lot of soybeans. If we can keep the demand side going, that certainly can help.
The minor crops, anything stick out to you here?
With these, I guess the dryable beans is one that stuck out. We're seeing a pretty big increase over production over last year. Of course, last year was production was short because of some wet conditions that happened at planting and then again at harvest. And also canola. We're seeing good production up in the canola market from year over year. And that's one that I would expect that we'll continue to see increase because of the canola becoming a little bit more of a market for the northern plains.
Moving to this slide, we have sunflowers on this one. Sunflowers down almost 50% from a year ago. Does that mean we're going to see more sunflower acres this spring?
Well, I think it's going to mean that they're going to try to come out and get more acres. We're going to see the sunflower industry try to buy more acreage. And we're seeing that in the price, is certainly improving as we go through this spring, a lot better than what we were seeing last year at this time. So I do think there is an incentive for the sunflower industry to try to come out and encourage planting. And they're trying to do that with price.
And then again, moving on to the where we're sitting with ending stocks right now. Again, big changes and cut much more than the trade expected.
A lot more. I mean, you got to remember back to May when USDA came out with their first crop production or their supply and demand estimates for corn. We were looking at an ending stocks estimate of close to 2.1 billion bushels. Now we're at 1.5. I mean, that's 600 million less. And that indicates that, demand has been good. Production was a little bit off of what was expected. And that tells us that, price might be a little bit undervalued right now from where it should be. Soybeans, we're still sitting with plentiful stocks, but they are quite a bit lower than where the trade had anticipated. And wheat, that's coming in pretty close to what was expected.
National average price. Corn did go up 15 cents again due to that big cut in production.
And they knowing that the price has to go up a little bit to ration the supply. When we see a little bit better exports, we see a little bit better feed demand. We could certainly take that ending stocks estimate down further. So we need to now start coming in and try to ration some of that supply. And that's why we're seeing the national average price up a little bit. Soybeans coming in at 10.20. I mean, where the stocks are sitting at, that's probably not a bad area to be at.
We also had the December 1 quarterly grain stocks report out. Again, cuts. Did that surprise you or not?
It did, especially, everybody was expecting to see a lower corn number, or at least equal to last year at this time because of the strong demand that we've been seeing. Nobody anticipated to see the lower soybean one. So that was actually a little bit friendly to the marketplace. And, with wheat, it came in pretty close to expectations. So it does tell us that we've been underestimating demand for corn and soybeans, and we've been pretty close to estimating where the demand has been at for wheat.
And again, here we have the charts for wheat, corn, soybeans. Anything stick out to you on these?
That our lines there that we're seeing, for the report for the December one is pretty linear. So we're kind of seeing, the stock somewhat in line with where we've been at in the past years, but it's still what it comes down to is that where our production's at and where demand has been at for, the use that we've been seeing. And it's been a little bit better than anticipated each year.
Moving on, we also had the winter wheat seedings report out. Like I said, we got buried in data this morning. This was a big surprise, though.
It was a really big surprise. I mean, the acres came in a lot bigger than anticipated by the trade. I mean, for winter wheat, we were looking at a little bit smaller increases than this. So when you look at all winter wheat, acres came in about almost 750,000 above expectations. And then what was interesting is where the breakdown came in those acres. Hard red winter wheat, which is the bigger of the classes, had a decent sized increase. It increased by, almost 267,000. But soft red, which is 20% of the winter wheat that gets planted, had an almost increase of 300,000 acres. It was the biggest part that increased. And that is the Corn Belt wheat. So is that telling us that a lot of producers in the Corn Belt are looking at some alternatives to raise besides just corn and beans? Maybe. But they had a good season to go in, to be able to get the winter wheat planted, get it started, and get it off to a good start here. So that it kind of surprised us that it was this big of an increase, though.
And we're sitting with acres, little bump from last year.
The trend, when you look back from 16 all the way up to 20, those 4 or 5 years, we saw a pretty big drop in acres. And then now it's been kind of a little bit more of an incline there, back and forth a little bit. It's interesting to see this much of an increase. I guess we'll see. The crop is sitting in fairly decent shape. We'll see how it comes as it goes through, it comes out of dormancy in February and March.
And like you said, this shows planted acres versus last year. And again, blue is an increase, red is a decrease. And that really, kind of sticks out to what you said about the Eastern Corn Belt versus the U.S. Southern Plains.
Yeah, you're right. I mean, you look at the classes of wheat. When you go to the Corn Belt area, that's the soft red. The middle areas, the plains, is where the hard red winter wheat is raised. And then in the West, that's where most of the white winter wheat is raised. So you can see the two classes that saw the biggest increases. And it wasn't the biggest winter wheat, and that is the hard red winter wheat in the plains.
Moving on to world numbers, USDA did not make any changes to corn or soybean production in South America. I don't think that was unexpected.
I don't think so either. I mean, they had what they, their token increases or what they expected to see come from the USDA. But with the weather forecasts and with everything that, the harvest just starting in Brazil for the soybeans, and Argentina still going through their planting season, it seems like it would have been a little too early to see too much of a production change. We are hearing some concerns about weather, especially the dry conditions in Argentina, southern parts of Brazil. And we're also hearing a little bit about wet concerns in the center, south or center of Brazil, where if those rains keep going, it could hamper a little bit of their harvest. So there's a lot of weather concerns that are still yet to be answered. And I think USDA just felt it was best to leave production unchanged.
And continuing that, they really didn't change production much anywhere worldwide.
No, most of the adjustments, when you look at it for the world ending stocks, came from changes in the U.S., and that followed through to show up in the world numbers. And they did see some significant changes. Again, corn and soybeans were primarily were the ones that saw the big changes, where wheat saw small increases, and that kind of adds to the friendliness for soybeans and corn and a little bit of negativity for the wheat.
And then on the bottom of that slide, you pointed this out earlier, we've taken quite a swing in world production from the previous year.
And you look at it, some of that, coming from the U.S. just because we saw, more acres of soybeans, less acres of corn. But when you compare, from the previous year, corn stocks are extremely tight versus a year ago. Soybeans are a little less concerning. And then wheat stocks are even tight as we continue to see, as far as the world is concerned, excluding China, some of the tightest supplies of wheat that we've seen in 20 years.
That is the last slide. Do you have any closing thoughts?
Well, just that, this report turned out to be a little bit better than anticipated. We shot up and traded with some pretty good gains, over 30 cents in beans. We were 18 to 20 cents higher in soybean or in the corn market. Wheat just kind of followed along. I would expect that we could see a little follow through with this, but we're back up above, some major resistance lines. We're getting into some good sellable levels. I think producers really need to start looking at, this as a selling opportunity to start moving some more of their old crop 2024 and maybe start looking at some pricing, some 25 crop.
Well, thank you for watching us. And if you have any questions, please feel free to call our office or email or text us. Thank you.